Hey guys, Mike here. So happy Friday to everybody. The weekend is here, and boy, I guess this will go as one of those, multiple 1% moves down and up, just like we talked about yesterday. We're only behind 01 and 08 as far as 1% moves. I think it was up or down, one of the two. But either way, we did it again. So, 3 days in a row for that happening. We're going to go over that. I'm going to show you exactly what caused those swings, because there was actual things happening. One coming from the Fed that you definitely want to hear about. And, it just makes me chuckle. I was talking to people in Discord about it. The desperation is pretty crazy. But, I came across this morning. I was curious what the Europeans thought about this one. But it says, after just 45 days in office, Liz Truss is eligible to collect a yearly 115,000 euros allowance for the rest of her life. And this is for security, for office staff, things of that nature. But the fact you serve 45 days at any job and you get that, I mean, that is unbelievable. And this is what I was talking about, what happened, right? Okay, so look, Japan comes out, their denomination is just getting destroyed. So what they do is, they didn't announce this, I don't think, but it's pretty obvious. They dump the dollar. They start selling the dollar. They start buying their own currency. And so people, of course, said, oh, wait a minute, they're stepping in, right? And so as you can see at the bottom, it's very clear. The Ministry of Finance stepping in to sell dollar yen said, so-and-so at FX Strategies, at TD Ameritrade. And, of course, when you see this kind of move on the dollar, you know it's big money. And so, of course, it just started getting crushed 8 a.m. and just sold off like crazy. And that's a big move of the dollar in one day, as you can see right there, which is good for stocks, actually, believe it or not, especially growth stocks. And you see it broke that trend line, which has been bouncing off of multiple times. And please hit that like, subscribe button, and share the video if you get anything out of this, guys. I really appreciate it. And so that was one thing that got this U-turn, which we're going to go over in the chart and stuff. The other thing was the Fed, right? They send people out, because Jerome Powell don't want to go out and talk, so he'll send one of his mouthpieces out to talk. And, of course, that's what happened today. And as you can see, one of our members posting in Discord, around 12 o'clock, the Fed Daily's out with hints at concern about over-tightening, backs up the notion of the Wall Street Journal story, which we'll go into in a minute. Daily is one that hinted at shift away from transitory back in early December 2021, which is true. She is Powell's mouthpiece when he wants to push a shift in narrative. The dollar is getting completely hammered at this point now. And the Wall Street Journal came out and said, we're definitely doing 75 basis hikes in November. But after that, it's going to be up in the air and way less clear of what they're actually going to be doing. And of course, you can see right here what happened. The dollar starts to crash down. The market pumps in the morning. Boom, 1.5%. And of course, the market makers are like, thank you very much. Everybody that had puts, we just crushed them. So they're selling like crazy. We'll take their money. And then it's all right, cool. Let's get the call buyers now. And then it dropped down 1.24%, and this is a very short period of time. Okay, so they say, market makers say thank you very much, and then all this news comes out from Daily and all of them. There's supposed pivot, which we'll talk about in a minute, and actually rocket up 2.36%. And if we take a closer look here and zoom out a little bit, you can see that we moved above the gap. And we have successfully tested that trend line that it had bounced off of multiple times, that it had been rejected at first, broke through, back tested twice now, moved up above the gap, which is actually a really good thing, and it is bullish, short term for sure. All right, so that is a good thing. The 50 moving average is actually right, probably about 2% above this, which would be its next resistance level, I believe. And so, we'll see what happens short term come Monday. Obviously, the weekend, you never know what can happen with the news and stuff. And if we do start to move up, you can guarantee people are going to start targeting that golden pocket between 618 and 650 on the Fibonacci level. You can guarantee, and that's basically right around that other gap that still has not been filled up there. And if we add in the RSI, guys, you can see right here, it did cross over that 50 mark today, right? Which, why that's important, you can get fake outs. You can see right here and here, but it's also considered very bullish. And you see on the last 2 or 3 really rallies, but 2 major rallies, that's what happened. Broke out, boom, seems bullish. This one kind of came up, broke out a little bit, traded sideways, back down we go. And then the other one you can see, once you go over 50, that's when you get you have a chance at nice side rallies, I should say. And so, it comes down to this. Originally, the pivot was they're going to stop raising rates in March, great, and start lowering rates. That was the whole pivot. Remember back in June when we did the rally? And now the market is desperate, right? They're like, oh my God, they're grasping at straws. Please let us start moving up. We need a narrative to paint the picture to everybody to sell them on. So now the Fed pivot is they're not going to cut rates at all. They're probably not going to stop raising for a while. Now they're going to keep continuing to raise, but it's going to be less. So maybe we don't get a 50 basis point hike in December. Maybe we get a 25. Maybe in January we get a 25 instead of whatever. And so that is now the pivot that the big money's looking for all of a sudden. So that's a big move now, right? And so it makes me laugh, but this is what I was talking about. Who knows where we're going to go with earnings? Who knows where this market's going to go? But I keep saying you can see where they want to push it, right? And so, I'm sure Jerome sent Daly out there and said, hey, because they're trying to calm, not so much the stock market, but the bond market, which is a total mess right now, right? With yields going through the roof. And so maybe they're trying to calm things down because they don't have some liquidity crisis. They don't want the Treasury to have to start buying back bonds. They don't want us to be in a situation that Europe's in with their pension funds, that the Japanese are in. All these different banks are having to step in and do certain things. And I think I sent the members this morning, it was the Bank of Japan. They're starting to buy bonds, right? Because they're trying to push the yields down. Now they're selling the dollar, trying to save their currency. And the other thing to look at is, like I sent out this morning, Amex reported, right? And the key phrase from the CEO was very simple. We're not seeing any changes in consumer spending, i.e. we are still running up the credit cards. And just for the heck of it, I got this open. Here's another oil company reporting, their highest profit in 7 years as they put oil and gas rigs back to work, which of course makes everybody happy to hear that the oil companies are making, record profits and all that good stuff, while gas starts to go on the rise again, even though what is the administration doing now? They're going to release more barrels of oil from the strategic reserve to try to stop it at least from rising so much. We'll see how that goes. And so, this is, I think everybody's waiting on this. Wasn't everybody waiting on this? Like, we've seen this movie before, right? That's what I told people in Discord. We've seen this movie before where the market wants to go higher. It wants to go on these short runs. Who knows if it's the bottom. But, it just wants to do it. And what happens? You'll start having these narratives come out. They go, woo. Daly said they're going to start maybe talking about what rates need to be at for November. Maybe they're not doing a 50 basis. Maybe they're not, and we don't know what they're going to do. But just the fact they hint at it, that we'll talk about it. And we're going to continue to raise rates on you, by the way. I think she reiterated between 4.5 or 5 or something. Well, it's still going to be the rates they're going for, just getting there a little more slowly. And it was like, that's all we need. It's like a dog in heat or something, just looking for something to pounce on and hump. That's basically what it is. And so, that's why you got that big run today. We'll see if it continues or not. I just see, at least it wants to get up to fill that gap above for sure. And like I said, I'll say it again, when you start to see the biggest bears start to change their tune on the short term, because you're seeing these earnings come in, and these earnings, obviously Snap's disaster, but it's Snap. I think that's a company problem, but you're seeing these earnings, and next week's the big one. Next week, which I'll go over all of them in Sunday's video. You got the big boys, all of them. I got them all on my calendar, Microsoft, Apple, Google, right? And so Amazon, and they're reporting, and I'm telling you, it's just like last time. If all they got to do is trip over the bar is so low, just don't fall on their face, right? And we get to see how a strong dollar in the third quarter affects all their earnings. Remember, Apple, over 50% comes from overseas, right? So they have to convert that back into U.S. dollar, which will hurt and lower what it's going to look like. And so, we'll see, but I'm telling you, all they got to do is come in right there at the bar. And all they have to do, too, if they know they're not going to hit it, have some announcement. We're making some layoffs, and Wall Street go, that's great, they're cutting costs. Woohoo! It wants to go. And then the other thing to remember, too, is these blackout periods will end to when, these companies who buy billions of their own stock, and a lot of, employees and, the big wigs in there, the CEOs and stuff want to start purchasing. Well, that usually, the blackout window is normally, it depends on what the company is, but 2 to 3 weeks before the end of the quarter, and then like maybe a week after they end up reporting, and all of a sudden you're going to see full throttle ahead stock buybacks happening again. So don't forget about that as well, right? And remember, what executives get, these year-end bonuses, they want to hit their numbers, okay? And so you're going to see a lot of that happening. That's just the way it is. That's usually why we go up in the end of the year, because you see a lot of stock being bought back and a lot of stock being bought by the executives, which looks bullish, and let's go, let's go, let's go. And so, be expecting that. I'm just saying data driven, data dependent. I don't mean it's going to happen, because you never know what news is going to come out. As you can see, you see what news does? That's what, even and in whatever the market wants to perceive that news to be, it will. Whether it wants to perceive it bearish, whether it wants to perceive it bullish. That's the prime example of what happened today. But you're seeing other countries, they're actually helping our tech stocks out, start dumping dollar, right? Because they're trying to save their currency, because they're so low and just getting destroyed right now. And I think another reason, I think they've reached out to our Fed and said, hey, can you please slow down these rate hikes? Because every time you keep raising the rates like this, it's hurting them, and even worse. And so normally we would help them out. Unfortunately, inflation is so high, they've held off on that. But now all of a sudden you're starting to hear multiple Fed presidents say, maybe we need to slow down the rate hikes and see what effect it's having, right? Even though you hear companies come out saying consumer spending has not changed, especially on services, and employment still strong as can be, okay? You saw yesterday, and so that's the two things that, of course, the Fed wants to affect more than anything, and they're not having it happen right now. The other thing I will say is their balance sheet, which I put this in Sunday's video, it's starting to pick up steam, rolling off, if you want to say that. It's a $9 trillion balance sheet, so every drop in the bucket helps. But they are definitely letting stuff roll off the balance sheet, and I'll show you that Sunday, okay? So let me know down in the comments what you got. Again, a lot of you guys are signing up for this, so if you want to sign up for them and ask me about it. So if you want to sign up for the membership, just hit the link down the bottom. I post everything in the Patreon and in the Discord. If you don't do the Discord, you'll get the morning news brief Monday through Friday. I post stuff in the Discord, keep you updated throughout the day, educational stuff, everything. Anything you can imagine is in there, okay, guys? So hope you have a good weekend, and I'll see you Sunday.